I've come to the conclusion. I think it's time for us to take a break, switch to demo for a bit until we fully understand the futures platform, and I would even like to say even our trading as a whole. This one's going to be a little longer video. Was testing out contract sizes, took one trade that wasn't so good. Then I was curious about contract sizes, took another one. Then, this essentially turned into my demo account really fast. Took one trade that was essentially a break even, and then when I started testing out the contract sizes, obviously that's when it turned to losses. But this is going to be the approach. I would put this in like the unlisted category for the community, but I just want to showcase everything. Did hit the max daily loss on the combine. So what's my approach going to be? Looking at everything from a realistic point of view, I really do think it's best to take that week break off. Obviously, sure, you can learn a lot in 2-3 days over the weekend, but realistically, in order to actually see that improvement, you have to take a week off, trade on demo, get the feel for it before actually going in and buying challenges. So I don't go in and just keep spending $150, $150, $150, $150. This account we have right now, this Top Step account, is going to essentially be our demo account for the week. We're going to not only get used to the contract sizes, but get a better feel for our trading, how we want our trading approach to be. I've been posting more so long form content recently because I just really want to have it like a documentary, to even go back rewatch myself. I'm not even essentially speaking about the future, but just as of right now, and figure out, okay, so this is the full breakdown, this is why it's happening, how can we fix it? Because I realize sometimes a lot of YouTubers, especially when they're taking losses, like to be less transparent and try to hide it. My mindset right now is essentially we blew the account. The reason why I have this mindset is because when I approach an account with lesser of an understanding, lesser risk management, aka so how I used to trade in the past, that's when the accounts are typically like play accounts. Just keep trading more, you overtrade, and then whatever the case is. But let's break down everything that essentially went on today on NAS. I was bearish on NAS until price action flipped. So I was bearish with price action breaking structure to the downside, but we ended up validating this hourly fair value gap down there, the hourly imbalance, pushing back to the upside on 15-minute. So I was bullish. Looked to take some buys, took a buy to the upside right here from around here, this 9.6 level up to the 28 level, 18, 28, 25 level. Took another trade. This was a sell. This was when I started testing out the contract sizes. Took a sell. Well, no, took a sell, exited right up here when price started pushing back to upside. Took a buy, took a sell, and then I took a trade of 10 micros and then 2 minis because I wanted to see the difference, and how quick you would lose money or how quick you would make money. The micros, we were up. So I placed the minis in order to see, okay, the difference, like subtract the difference based upon like tick sizes. I have no idea what tick sizes are or tick calculations. Sorry. Let me clear all my tabs. Sorry. But anyways, with that being said, before I actually even go into any trade breakdown, but I want to go into what our approach is going to be for the rest of the week or even the time being. Obviously, we set our goals for quarterly. Fortunately, we have enough time before the next quarter starts, which is essentially like a week-ish. We have essentially a week and a half worth of time in order to ensure that our trading is, where it needs to be before we actually go in and start anything. So what's my approach going to be? What happens when, you take a bit of losses, feel like you need to take a step back? Now my lips is just dry. So what happens? As of right now, what is the plan? We have the 150K account that we bought. That is now switching toward our demo account. We also have a practice account with that. So we're going to be like sifting between both. We're going to be testing normal risk with both of them. I just want to get the full understanding of contract sizes, what the range is going to be, because if I show you guys, when we use I'll shrink my screen a little bit more. When we use, let's go right here, it only shows risk from 0.5 to 1. With the first trade, I didn't want to risk 1%. I wanted to risk around 0.75, 0.7. And so you kind of have to do a bit of quick maths, but I feel like if you have a range of how much is a viable risk, maybe 0.5 all the time, you're able to get a gauge, kind of. Because to be honest, I don't even have a full like funded account strategy approach, like a risk management approach. I was saying it out loud. I don't really know why we bought the account. Actually, I do know why. We wanted to get our funded accounts back fast. But anyways, so a few things we're gonna go and develop. I'm actually gonna write it down so I would have wrote it down. Anyways, but the first thing I actually want to figure out is contract sizes. So there's kind of like a priority list. This contract sizes. Then I want to dive deeper into our own personal trade strategy. I'll document everything here too, so anybody that's curious, the learning aspect of figuring out, okay, how do we actually want to execute? For you guys that don't know, I've always had an issue with not strategy hopping, but not knowing how to like continually execute on the same thing. So for example, for 1 month, I would execute liquidity sweep breaker structure. For another month, I would, or on 5-minute time frame. For another month, I would switch to liquidity sweep breaker structure specifically on a macro to micro time frame. So scaling from 15.5, then executing on 1 minute. As of right now, I'm utilizing all of our tools, right? Which isn't a bad thing, but it is when you don't fully, I feel like not understand. I don't know, maybe I'm doubting my own trading, but the main aspect I'm trying to say is I want to develop a set strategy or even a set rule of playbooks, even separate ones that we keep executing on every single time. So whether that be, us going on whatever and, scaling down from higher time frames. So let's say it's like, oh, okay, so bam, looking to trade gold, retracement right here, cool, right, we're bearish, whatever, and then scaling down on 15, seeing a retracement, and then on 5-minute, oh, this looks horrible, but you get the point, you get what I'm trying to make. Let's say we're looking to execute on either the 1 or the 5-minute, but just having that full understanding of, okay, what are we looking for? How are we going to look to execute? I've traded in the past where I've executed strictly on liquidity sweep breaker structure, either fair value gap or order block retracement. Some of my ICT people would call it unicorn setup. I don't know. But the main aspect is I'm trying to figure out, okay, how is our new trading approach going to be? Because I realize with trading contracts, I tend to want to have a higher risk reward because I see a lot of people in the community have such high risk reward. I don't know if I should allow that to get to my head, but I don't know. But I do want to go in and figure out, okay, what do we want the edge of our trading to be? And essentially, how do we want to trade? Do we kind of like back to the basics? I don't know. I just felt like everything recently has definitely been a whole entire reset. Just like back to ground zero. Which, I mean, depends how you see it, Kind of had deja vu. But depends how you see it, You can see it as a negative thing or you can see it as a positive thing. I see it as a slight benefit this time because we have more market experience in what we trade and how we trade. But, I heard a saying from Chris Bumstead. If you don't know who he is, I be surprised if you don't know who he is. But Chris Bumstead, and he said this: you may have gotten lucky before, but that was then and this is now. You're going to have to work 10 times as smarter and 10 times as harder in order to get where you want to go. And thinking of that, it's realistic. I kind of allowed myself to like die down the ropes, like let off the ropes, because I was like, okay, I'm good. We're funded. We're getting payouts. Cool. We're making a bit of money, right? But now realizing it, kind of that wake up to reality is like, okay, you still have things to work on. Yes, you're looking to build that consistency. Sure, you've made money, but the question is, okay, are you able to do this consistently, right? And so consistently knowing your edge and not switching it up every single month. I think that for me was my biggest fear within my trading recently. Like, okay, we're doing good. What if we end up overthinking and switching it up, right? Or whatever the case is. So, first approach, we want to understand futures. So I'm going to write that down. So, for anybody watching this that may be going through the same thing, do the exact same, all we can do is sit there and figure out, okay, what do we need to improve on? How can we continue going? And by doing that, you get better over time, right? You get better over time. You take the losses, you take some wins, maybe you get some payouts, maybe you get some funded accounts, whatever the case is. But I kind of want to rebuild everything from how it was. I don't want that mindset of, okay, just because you have some money to blow, you go buy a bunch of 150K challenges and keep full porting them until you get funded. No, I want to, what I intend on doing with the funded approach, we're going to start small again, I'm not going to start small and stay on small forever. After this approach, of taking a step back and trading on demo for a bit, and all the next trades you see are going to be demo, by the way. We are going to get a 50K challenge and properly approach that with whatever funded account risk management or trade strategy we would intend to approach it with. I found by looking back at my journal, I'll show you guys too. When we got funded, the most with our 200K accounts or 100K accounts or, however many accounts, it was always, and yeah, we're going back a distance. We're going back all the way to October, November, because that's when we were balling out. September. So around this week. Yeah, around this area. Actually, a little bit before. It was when we were getting funded. So somewhere within this range, I realized that all of these trades we were taking were swing trades. Look at this. This is on the hourly time frame. 1 hour. Gold sold to the downside. But it allowed us such a clean execution, right? In order to do X, Y, and Z. And I realized this was actually my approach for all of my funded accounts. How I got funded for majority of them. Unless I just went in and full ported them, when price was trending or whatever the case is. So the question is, can we have a set funded trading strategy and approach, right? Because if we have that, then that's not even a concern. And then it allows us to really narrow in on our trading, because I realized with my funded account approach, I'm a lot more aggressive with my risk percentage. And even with this, switching to Top Step, their max you can lose is 3%. I'm pretty sure 3%, you have to gain 6%. So that's $9,000 profit target, $4,500 max loss. Yeah, $4,500 max loss. And so I went with the mindset of thinking, okay, so risk 1% per trade. But it would actually be, I don't know, because I need to figure it out. That's why we're here doing it. So first thing I want, really, this video is just to like break down, okay, like where I'm at with my trading, kind of just like a self-interview with me, and analyze, okay, what are we going to look to improve? What do we need to figure out? Everything of the sort of our trade strategy, how our execution is going to be, but not overthink it. Because especially right now, I feel like I'm having the tendency of overthinking it. which is normal. But we want to make sure this overthinking doesn't lead us into a place where it's like, okay, now we don't even know how to trade. Like, I have times where I wake up, I'm like, okay, I'm killing the market, and then I have times where I wake up, I'm like, what's buy, what's sell, what's bias, like, what are we doing? And bias is right in front of us. So first, understand contract sizes, understand futures. Then, this part's big too. Let me exfoliate my face. Understand our trading. And this consists of whatever, whether we're going to, obviously our trade strategy doesn't change, like how we execute, whether that's SMC, right? That doesn't change. But our approach to it, whether we look to execute and be more of a scalper or be more of a swing trader or be more of an intraday day trader, whatever the case is, when we look to execute, all of that sort, bam, is there. So that's that. What else? Funded account approach, or prop firm approach, I'll just call it. Prop firm approach. And then risk management. Not necessarily just with the prop firm, just risk management as a whole. Because I realize, even if, let's say, in theory, okay, cool, we had futures funded account. I have no idea, like, yes, I know how to trade, but no, I have no idea, like, the risk management approach. Am I risking 0.5 per trade? How much of a buffer do I have? Do I want to create a buffer? Since futures is a different industry per se, I don't know how everyone else trades with their risk management. Obviously, I know everyone's different, but what's the typical risk? Is it the same thing like everything else where you risk a 1 to 3% per trade, but you can't risk 3% per trade? So it's a little, I'm getting used to it, but we're going to be trading demo for a bit, really going and refine. I'm looking forward to this. I'm looking forward to taking a break, really figuring out, dialing in on our trading and understanding. And I promise you, mark my words, we're going to come back from this break. Because of the work we put in now, we're going to absolutely kill it. I promise you. I promise you. I promise you. This week break, week and a half, whatever, however long of a break we need, there's no time limit on this break. Why? Because I know once we come back, it's game over. It's game over, right? So I'm going to take the time off we need to take off. Really, like, figure out, obviously, like I said, still documenting, still journaling everything, still going to be recording everything. I'm going to try to record every single day, keep you guys updated, just like little checkups like this, or even after the demo trading day, or whatever the case is, right? And we're going to go in and yeah, we're going to kill it. We're going to take a break off, come back, keep our head down. We're gonna do what we need to do. That's how it goes. Switching back, looking at the charts now. Yeah. We have a little bit more learning to do. We're not fully there yet, but we're close. We're close. I can feel it. I can see it. We're close. So I'm gonna go in and analyze a bunch of these things and really just focus on these throughout the week. Even focus more on bias, or focus more on the pairs we're trading, or really like dial in on understanding them. It's stressful, but that's part of the game. So we're gonna get this set in stone, get it moving, and then I'm gonna stop talking. I'm gonna record. I guess Day in the Life episode 3. I don't know how often I'm gonna record them, but I think it's cool to record this. So anyways, apart from that, let's continue on the journey. I'm gonna exfoliate my face. Let's go in. Let's be the absolute best there is to be. Because to be honest, we really don't have any other choice besides that. Word. Bomba club.